If you have a 401k, an IRA, or other stock retirement account, make sure you're not overpaying in fees. And if you didn't know that your 401k is charging you a fee, you're not alone. More than 90% of Americans don't know what their 401k fees are. When you invest your money into a fund, whether it's a mutual fund, index fund, or ETF, you have to pay a fee called an expense ratio. And this fee is not a one-time payment that you make. It's a reoccurring payment based off of how much money you have invested and how much money your money made every single year that your money is invested in that fund. Let me show you how this plays out. Here are a couple of the most popular funds in the United States used by 401ks. VFIAX gives you exposure to the S&P 500. That's a group of the 500 largest companies in the stock market. And GFACX gives you exposure to the American Funds Growth Fund. The S&P 500 fund has an expense ratio of 0.04%. GFACX has an expense ratio of 1.36%, which means for every $100 you invest in this growth fund, you'll be paying $1.36 in fees. For every $100 you invest in the S&P 500 fund, you'll be paying 4 pennies in fees. Both of them might not sound like that much, but see what happens over the long term. Over the last 10 years, the S&P 500 fund has averaged 12.5% a year over the last 10 years, versus the growth fund has been growing a little bit faster. It has grown by 12.6% over the last 10 years on average. So now let's do some math. Let's assume that you invest $1,000 a month into both of these funds, and let's assume that we get these same returns, 12.5% for the S&P 500 fund, 12.6% for this growth fund, but then you also have to pay these fees. If you invest $1,000 a month for 30 years, you would have a little bit over $3.56 million in your retirement account, and this is after paying around $29,000 in fees over the course of the 30 years. But what happens if you're paying higher fees and you're getting slightly better returns? Well, now instead of having $3.5 million when it comes time for you to retire, you're gonna have around $2.7 million in your retirement after those 30 years, because you had to pay almost $900,000 in fees. This is a 1.36% expense ratio, not just on how much money you're investing today, but on every dollar that you have invested and every dollar of profit for every year that your money is sitting in this account. So your fees are compounding along with your wealth. But it gets even crazier if you let your money compound even more. If instead of investing your money for 30 years, you invested your money for, say, 40 years, well, now in this instance, you would now have a little bit over $11 million when it comes time for you to retire. But here, because you're paying 1.36% in fees with slightly better returns, you're only gonna have a little bit over $8 million when it comes time for you to retire. $8 million is a lot of money, but you're losing out on $3 million just because of this fee. This is why your homework after this video is to open up your 401k account and see what your expense ratio is, because you don't want to be overpaying in fees. And if you are paying higher fees, make sure the returns are justifying the fees. Because what we've seen through history is that in general, high fee accounts do not outperform the lower cost, lower fee, passively managed accounts when you look at it over the long run. Now, for those of you that are investors, one of the things that can also help you get better returns is just improving your financial education and your financial research. And this is where my team at Briefs Media publishes a free daily newsletter called Market Briefs, where we break down what's happening in things like the economy, the stock market, the housing market, crypto, and the global economy into a fun, witty, and easy to read newsletter. We have hundreds of thousands of investors that are reading Market Briefs every morning. Plus, when you join Market Briefs, you'll also get my investing masterclass free as a bonus just for joining Market Briefs. So if you want to get Market Briefs and my investing masterclass for free, all you have to do is click the link down in the description below. I think it's obvious why checking your expense ratio is one of the most impactful financial decisions that you can make, which brings me to the second most impactful financial decision that you can make, which is cutting back on some of your big expenses. The two largest expenses for Americans today are your house and your car. The median housing payment in America today is $2,205 a month. This does not include your property taxes and your insurance. And the average new car payment in America today is $742 a a month. This is just on the car payment. This does not include the premium gas that you need now for your BMW. This does not include the oil changes that you need now for your BMW. And this does not include the maintenance, which is a lot more expensive on your BMW. So if you're in a position where you're struggling to find some extra money, one of the simplest things that you can do is start with the biggest expenses and see where you can cut back. If you can find a few extra $100 a month by downsizing where you live, or maybe you can find an additional $700 a month if instead of taking the $8,000 you put down on your car, you drive around in an $8,000 car. And then you take this additional $700 a month and you invest all of that. Well, now this is a way for you to find a few hundred to potentially $1,000 extra a month by finding the big expenses that you can cut back on. Now, it's not fun to cut back. My goal isn't for you to just not enjoy anything in life. I want you to make sacrifices for a period in your life that way you can live the rest of your life without having to worry about money. But in order for you to do that, you have to build your assets, you have to build your investments, and the only way you can do that is if you have the money to invest first. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.